BV,
What's happening? I think we're
it's
live, dude.
time. We're live. The last word. It's Friday. It's 1 o'clock on the East Coast. We got some people who are like, "Hey guys, what did I tune in for? I've got things to attend to this afternoon."
Right on. Yeah, so the last word brought to you by the Chrisman commentary. So super excited about what Rob and Robbie are doing to take, what's been a tried and true, honestly, one of the most consistent, reliable sources of news in the industry for me for the last 20 plus years has been, Rob's email. I remember first subscribing to it. I imagined him sitting at night, like typing it and then hitting send every morning. And now they're branching out into some other mediums. I know we've been doing webinars, as well over the past, but this is one of the daily shows each week, and we get the last word of the week. It's pretty fun.
Yeah, it's funny when this idea was being discussed a couple months ago. Friday's a little bit of a gap. It's not the best news day. People are doing their thing. In fact, just to kind of set it up, a trick in DC is if they ever, regardless of party in power, they ever want to roll out bad news, they do it late on a Friday.
Yeah.
And because no one's paying attention. And so we have a tough gap to fill here. But you and I, we accepted the challenge. Let's make it fun. Now, I know we did a teaser video when we were in Minneapolis together at the Total Expert Accelerate. And, on that teaser video, I kind of like threw out that, I might be having a cocktail every now and then. Well, I will just say at 10 a.m., it's a little early.
Maybe a bloody.
Yeah, maybe. I'm also on a 30-day no drinking kick. So I'm trying.
I see it. I can see it. I can see the.
Oh yeah.
Oh yeah. Yeah. You look good.
I think it's the filter, but Fridays are meant to be fun. It's going to be a cool opinion show. I'm sure people are tuning in like, what the heck are these guys going to talk about? But you and I, we've known each other a while now. You used to run all of TPO for Flagstar, which was, is still one of the most phenomenal success stories. It was originally, owned by the Hammond family.
Yeah.
And a privately owned independent mortgage banker, and obviously now it's under NYCB, and still a great group of people over there. But our paths crossed because you've been in the TPO space. I've been in it since 2001, and so we had a lot to talk about. And then 5 years ago, just this past month, you and I were both at the U.S. Open together with Tavant in Pebble Beach, and you're like, "Hey, man, I'm going to take this gig over at FinLocker." I'm like, "Hell yeah, man. I've been looking at that thing." So, anyway, I just
5 years.
5 years. I was with Martin Warren, just, last night and the night before. We're both, go grab a cocktail or a bite to eat or a cigar every now and then. Of course, I'm not drinking right now, so I'm watching him drink beer. But, he's like, "Can you believe Brian's been there 5 years? 5 years at FinLocker."
I had jet black hair when I started here, just so you know. Scott Payne, bringing the fire. Hey, Scott. So KP, let's set the table. This is episode 1, right? We're a weekly show, 1 p.m. Eastern, 10 a.m. Pacific. Fridays. We're working with Robbie on streaming this thing live, probably on LinkedIn and maybe some of the other socials as well. But the idea is, as we already said, is to kind of have the last word of the week, kind of talk about, some of the newsworthy items from the week, of course, get our spin on it from our seats in the business. And then I think we're going to have a couple guests join us now and again as well, and kind of get, some varying thoughts and opinions along the way. What's always helpful for these type of shows, if you will, is really understanding what you all want as a listener and as a watcher. So, shoot us a note, DM us. I don't even know how else you could do it, but, send a carrier pigeon. Tell us what you want us to talk about. If there's things that, you're hearing, you're seeing, and you want to, get our opinion, we'd love to get some input along the way from you all, as well as your you're tuning in each Friday.
It go down in the DMs. So yeah, shoot us a LinkedIn message, and we'll check it out. I've gotten better at referring and looking at my messages. Man, sometimes you get bombarded, but hey, I just wanted to add too, the Crispin commentary. I love the fact that it's doing like this whole lineup and suite of shows throughout the week. And, we're in the 5-hole, right? So, we're batting cleanup big time. So I guess that means you and I are sluggers here, which, by the way, I want to make it fun and personal, but dude, like, how cool is it? You got this great family that all went down to Mexico to watch your son pitch.
We went to Texaco, KP. Texaco. So, our oldest son still chasing, playing professional baseball. This year he's signed and playing in the Mexican Professional League, which is pretty wild. We stream and watch every game at night. They're 100% in Spanish, so it's pretty wild. And they're the fan passion around the sport there and their teams is so cool. It's kind of like we see in football, soccer, right? And other parts of the world where there's just noisemakers and all the horns blowing and all that. So it was pretty cool. We flew into Laredo, Texas, watched a game in Laredo, Texas on Saturday night. Sunday, drove down to the downtown Laredo and walked over the border, over the bridge into Nuevo Laredo, Mexico, and then went and watched the game there in Nuevo Laredo. It happened to be the 145th anniversary of Nuevo Laredo. So they had like a street festival going on around the baseball stadium, which included live wrestling. The Mexican masked wrestling was so fun.
Saw that.
It was so cool.
That was so good.
Yeah.
Oh, well, so those boys, so I'm from Dallas originally, north of Dallas, a place called Garland. If you've ever seen King of the Hill, the cartoon, that's actually made after Garland. The city's called Arlen in the actual show, because the guy Mike Judge, who created also Office Space, is from Richardson, the town over, and they make fun of people from Garland. So anyway, I went to school in Austin, and I've done a lot of border town trips. And let me just tell you, Nuevo Laredo is a blast. You're a brave man staying there in the evening nowadays, but there's so many great border towns down there. Whether it's Matamoros, down, go to Brownsville, Eagle Pass, Uvalde, El Paso. It's a lot of fun. And I was watching that experience with you and Cam. And just so you know, so my second daughter, we have 4 kids. My second daughter has a teammate on her soccer team. She's 9. And her dad, Hector Ombres, used to pitch in the majors, and also pitched. He also pitched in the Mexican League.
Oh,
so
wow.
AMBRIZ. So he was like on the backside of his career trying to get back into the league, and he would tell me like, the bus rides on the games and just crushing beers like it's no. I mean, when you're a pitcher, it's a different animal, right? You come in relief. You never know when you're pitching or not, so you're crushing beers on the road. So I shared your experience and Cam's experience with him, and he got a kick out of that. He's good for some really good stories about the Mexican baseball league.
Yeah, that's a whole other podcast we could probably do. So let's get into this. Interesting week, right? It's the first full week coming off the holiday kind of break, because last week was really a dead week. It seemed like across the industry, with the July 4th being right in the middle. But we had our first full week. A lot of stuff going on this week. I know we weren't going to get political, but I'm going to go right there, right out of the gate.
Okay.
Yeah.
Let's go.
And I'm not going to talk about the news conference last night. So in DC, our friends, you and I we're on the board of the Broker Action Coalition, right? BAC. And I talked to Brendan McKay this morning. Brendan is kind of the chief advocacy officer for BAC. And he gave me an update that I think is pretty timely on what's going on with trigger lead legislation. I'll give a quick update in KP. I just want to pick your brain because you're you're running a multi-channel mortgage business that is, probably lives every day dealing with some aspect of what happens with trigger leads. So I'd love to get kind of your perspective as a owner operator, in the trenches, originator on this. But what Brendan shared, which I think is timely for the audience, because I don't think it's made any of the news wires. So the last word is the exclusive news provider of this news, as it is. Yesterday, let's go. Yesterday, in the Senate, and I took notes like a good reporter would, so I got to read my notes here. Last week or yesterday rather, in the Senate, the
Breaking news.
breaking
Breaking
the bill, the legislation for the Trigger Lead Act, I think it's the Consumer Privacy Act, was added as an addendum to the National Defense Appropriations Act,
which is huge. Which means it actually has a chance to pass.
Yeah. I mean, it's like, not to say it's a guarantee, but this is like the car hauler ferry that goes across the water, that has to go every day or every week or whatever, and your little Kia gets on it and gets to go on for the ride. That's kind of what's happening with this consumer privacy.
It's more like that meme where it shows that train that's got people hanging off of every car and like they're just jumping on right at the end.
Yeah.
So that this rider being attached is a big deal. Just everyone.
Yeah. Real quick, and I'll let you kind of jump in. It's not a slam dunk. I don't want to reference that. True. Brendan made sure to say that, but he felt really good about the fact that it's added as an addendum. Brendan and Katie and the team at BAC have over the next 2 weeks, they have 7 meetings in the senator with 7 different senator offices to talk about what's going on here. And so before I hand it to UKP to kind of weigh in, I just want to make sure that everybody understands that we all have a voice in these types of things. So whether you are working with BAC at that, if you're in the mortgage broker channel, or with the Mortgage Bankers Association, or with the National Association of Mortgage Brokers, do your part. It's very simple to play a productive role in this. If you go to the BAC site or the MBA site, I'm not exactly sure where it is on NAM, but there's an easy process for all of us to communicate with our local representatives on this topic. So, do that, do your part. It does help. And maybe in a couple of weeks, we'll come back with better news on where this thing is going as well. But KP, your thoughts on all things trigger leads and as well as this process.
Well, obviously trigger leads are annoying. It's not a good borrower experience. They've been bastardized. The thought and idea of giving a borrower a chance to shop around, has good intentions, but the way it's structured right now, it's a terrible experience. I mean, the second it's pulled, you're getting calls from all over the planet, repeatedly. And so it's just not a good experience for a consumer. And to be honest, like, consumers have information at their fingertips readily. They don't need to be bombarded with calls. And can we get into, like, millennials are really, the bulk of first-time home buyers. They don't want to talk to anybody anyway.
Right.
So
they're not going to answer.
Yeah. And so it's just time to change up the space in the game. And so it's good to see this bill, which has been advocated, by the Broker Action Coalition. The BAC is what you're referring to, which is a group that's spun off and is separate from AIM, the Association of Independent Mortgage Experts. So this is a action committee, a political action committee. So they do raise funds, the BAC PAC, and then of course the BAC is a grassroots group of state captains and different industry leaders coming together to help push things through like this. And so the ground game is really good. Brendan's awesome, Katie's awesome. I love working with them. I'm one of 4 lender representatives that are on the board for BAC. They run true board meetings. We follow Robert's Rules of Order. It's a legit organization. So of course the MBA, Mortgage Bankers Association, they're also been advocating for this. So it's nice to see some trade organizations get aligned in that. And by the way, I'll just throw out a little inside baseball, because that's what you came to the show for. Some fun little nuggets. Katie Sweeney is also from the Dallas area. Well, she's technically, I guess, an Iowan, but was raised and grew up in Dallas, Texas, and she's a Longhorn fan like me, even though she went to Pepperdine in Malibu Canyon. And when I first met her, she was working at Pacific Union, and they were kind of going through some changes. I think they're being bought by Mr. Cooper. And so, her marketing team had been gutted in that acquisition, and she was on the road looking for a new home. And I think we were at the NAM, ironically, the National Association of Mortgage Brokers show in Vegas. And Anthony Casa was there to meet her. And I had been speaking with her, and I had been speaking with Anthony. And I was considering, maybe I can find a role for her to ramp up our digital marketing team at PRMG, but I couldn't afford her. I mean, she was coming down from Puff. And you and I are friends with Anthony Casa. I mean, that guy will just pay whatever and pay up for top talent. Money is no object for that guy. And so I was like, let me walk you over to Anthony, introduce you. It's like a warm handoff. And they made some magic happen together when they created AIM and really did a good job of digital marketing. And now she's part of the Broker Action Coalition. So she's a dear friend. Brendan's great. Got a chance to really work with him well in the last year. And I love that this industry is finally getting closer to getting rid of a horrendous consumer experience with trigger leads.
Yeah, I would also want to add that, in addition to MBA and National Association of Mortgage Brokers, and of course, BAC, the Community Home Lenders Association, Taylor Stork leads that group, they've also done just an amazing job of advocating, not just for their group of members in the CHLA, but for the industry at large. And that's what's been super cool about this particular piece of legislation and advocacy. What I've seen for the first time in really a long time is where multiple associations representing multiple, interests, if you will, in the industry have come together to kind of really work together as an industry as a whole, which is really powerful. Our friend Greg Scher, kind of coins this new hashtag, all of us, and it really does represent this idea that wherever we sit in the industry, we're all serving the same end consumer. And so it is all of us serving all of you consumers. So Greg also just announced he's launching a show on Monday. So he's going to be the kickoff of the week, and then you and I get to close it out.
Yeah, Greg brings the heat. So he's he reached out to me. It was fun, just kind of randomly a few years back on LinkedIn. He's like, dude, you're killing on LinkedIn. Have you ever thought about like using this in recruiting or whatever? He had like a message to me. And I'm kind of sharing again some inside baseball. I was like, yeah, I've kind of taken this approach where like I don't really want to talk about PRMG. Like I want to just talk, right? And so he's killing it at that approach himself. He's such an advocate for the industry. And I think, what we've all discovered is, when you serve others, that is just the right way to roll. And I would say even 5 years ago, I would have said, when you help others, you get in return. But that sounds very selfish. It's like You're not actually truly a servant. So I stopped thinking like that. I stopped even saying it. Just serve others.
Yeah.
Who knows what's going to happen? We are all. It's funny. I talked about this on a podcast or two this week, and we're trying to be humble servant leaders, right? And so I've got the servant leadership part down, and I'm always working on humility and being humble. So love Greg, love what they're doing, and I love the fact that we're getting rid of this terrible experience. I will say though, if you take money out of the pockets of the credit bureaus, they're going to get it back somewhere else.
Yeah.
We've already seen them, rake us over the coals, right? So
nothing.
It's a general thing.
Yeah. Nothing, everything comes with a cost. Let's remember that. So
there's no free lunch.
Exactly.
There's no free lunch,
especially if you're having lunch with me. So I'm part of a startup, right? Come on. So Ira commented, just as a recommendation, I think, for everybody, if you haven't seen the comments, answer RFIs, request for information, right? there are RFIs put out. I think there's one out there, maybe came out this week from Fannie Mae on a topic. I didn't dig into it yet. Ira brings up a great point. These RFIs are out there for a reason. They're a request for information. It's our opportunity. It's your opportunity to give your opinion, give information on a particular topic that may or may not, come to be. So yeah, Ira, great point. There are RFIs that come out from time to time from either agencies or others, and if there's going to be an impact to our industry, I would hope we're all, checking those out and putting our comments in there, especially commenting on, the potential consumer impact of whatever the particular issue is.
There's a reason why Ira always gets a shout out from Rob Chrisman. So when Rob's on a Zoom, he sees Ira, he always gives Ira a shout out. So
yeah,
thank you, Ira, and I agree. I mean, we have labor attorneys, compliance attorneys, and general counsel. We have all kinds of stuff in our compliance teams, and we're either someone's doing it on our behalf and we agree with them, or we're also adding in. So good point on responding to RFIs. And by the way, speaking of RFI, I mean, I don't know if you want to talk about this at all today, but I think it's a big deal that the FHFA, Federal Housing Finance Authority, the regulator of Fannie Mae and Freddie Mac, after a comment period to one of those RFIs, green-lighted Freddie Mac to securitize second liens on top of Freddie Mac first liens. So there's $860 billion in tappable equity on top of Freddie Mac first that Freddie Mac can securitize a HELOC.
Yeah.
That's a big deal. I mean, that is a humongous deal. I don't think people realize how big of a deal that is. It's great for consumers to get the best A-paper rate as possible if they're tapping into their equity. My hope is that Fannie Mae is soon to follow. Some of the guidelines in that green lighting after the RFI and comment period, I know that Mortgage Banker Association was really big on pushing that this be rolled out in like a limited scope. We're going to test it with a few independent mortgage bankers in a small rollout. You don't want to just blow out the secondary market for second liens. A lot of banks and credit unions and IMBs that have built up business models around selling, whatever margin is in a HELOC, which is not much, by the way.
Yeah.
And in theory, it should get thinner, the margin per transaction, but there should be a lot more liquidity if Freddie Mac is behind it. So you should make it up in volume, which everyone wins, just like this rider on the bill for the trigger lead. So I think, this RFI point that Ira makes, we just saw it in action and go through the process and create a game-changing product and liquidity pool for HELOCs after Freddie Mac first liens.
Yeah, you answered my question, because I was going to ask where you personally kind of come out on this, and you answered it probably the same way I think about this. Is generally speaking, if we're talking about expanding liquidity and availability, I think that's generally a good thing, right? The devil's always in the details on how things get rolled out. So I know when this particular issue had some, quite a bit of divisiveness, across the industry, probably not surprisingly, financial institutions that, depositories that really kind of live in this space more so than non-banks. But I personally do think and believe, like you, that it's generally a good thing for consumers when there's more access, more liquidity, and perhaps even maybe an easier access point for that equity.
Well, yeah. So yeah, banks don't like it because, they in one respect, they have very cheap funds and access to capital. That is their biggest advantage. That's why they smoke everybody on jumbo loans and things like that are proprietary to their balance sheet, credit unions as well. But so with Freddie Mac offering liquidity for second liens and HELOCs, it just opens it up. But, I would challenge anyone that has a scarcity mindset as opposed to an abundance mindset that, especially if you're an executive at a bank listening to this right now, there's going to be more of this business out there. So go get it. Use a tool like FinLocker to be better at engaging the client and offering it to all your clients. I mean, I was in on Monday, literally the Friday after this was announced by the FHFA. I was in a closed door meeting with Total Expert at the Customer Advisory Board in Minneapolis, a room full of digital marketers. And I was like, hey, it's Monday. We just had this announced. Have you gone through your entire list of every loan you've ever done that's securitized by Freddie Mac first, sorted it, got it out, got the automated marketing, send out an email, blast it out, boom, go? Like, That's what everyone needs to do. And I guarantee you, it still hasn't been done.
No.
So, banks still have an opportunity to do that themselves, by the way. So, pro tip, that's how you go get that business when it's out there, or get ready to get that business. So go get it, right? So it just puts more onus on, being a better marketer. You can't just stand up and say, I'm the bank and you're my client forever, so you get everything from me. That's not how it works. We're in a world of information, and so we need to get as much information to our consumers as possible in a modern way. And that includes saying, hey, you can get a cheaper HELOC, and everyone's going to win in the end. There's going to be a lot more of that business. And I think, we're a Freddie Mac seller servicer and Fannie. We're also a Ginnie Mae issuer. We don't securitize a lot. So we're probably still going to lean on another outlet to sell best execution on the flow in the back market of Freddie Mac HELOC. So, we have the option, obviously, to sell it to the cash window at any time, but we're probably not going to securitize those. It's just not that's not really our model.
Right.
It's such a cash intensive thing to do, and we like doing a lot of deals quickly. So just because it's out there and approved doesn't mean every Freddie Mac seller servicer is suddenly going to just start securitizing loans. So there's still a lot of opportunity for banks, credit unions, and anyone in the ecosystem to go after $860 billion in tappable equity. I mean, It's just it's growing, bud.
So we've now turned into a product guideline show. We got some questions around the product. Let's see if we'll come back to those if we can in a minute. But because we're getting to the bottom of our 30-minute here, we're going to try to keep this around 30 minutes for the audience so that people can get on with their Fridays. But kind of a interesting week in the market, KP. I know you do your KP talk and walk, or walk and talk, or walking with KP, or whatever it is.
Or sit at my desk like an idiot.
Your videos is one of the first things I see. What is it? Monday mornings.
You've told me. You've told me.
Yeah.
Reading material.
Right on. So maybe give us a little bit of a synopsis of kind of what you talked about on your walk, your videos this week.
Well, obviously, it's a parlor game in a little bit to try and guess when the Fed's going to cut. But it's also very important. I mean, I'm just going to say this. Don't fight the Fed. Don't fight them on the way up. Don't fight them on the way down. They call the shots. Rates get better, business goes up. Rates get worse, business goes down. That's the bottom line. Don't fight the Fed. And so knowing what they're thinking, knowing what they're going to do. I mean, it's funny because I see a lot of commentary, especially on LinkedIn. We lock loans every single day. I mean, people literally watch the ticks up and down of mortgage-backed securities and decide when to send business.
Yeah.
I mean, minute by minute, literally every day. So it is important to talk about it. It may be exhausting for people that are not originators and don't actually sell mortgages or not real estate agents, but it is like we are so highly transactional that what rates do matter every minute of every day. That's why we talk about it so much.
Yeah.
And the inflation report yesterday on the CPI was a game changer. Nick Timiraos is known as the Fed Whisperer. He's from the Wall Street Journal. I was literally just listening to a video right before I hopped on with you and Robbie on the Zoom call, 5 minutes before start time, which is the earliest I've ever been to any podcast.
You beat me here.
I don't even know how I did it, by like 10 seconds. But a win's a win. And, Nick was saying, look, the CPI print was 4 steps forward and the PPI print was 1 step back. So, I'll just make one more comment that maybe you haven't heard from me or anyone. The Fed wants to cut in September at this point, barring any unforeseen data between then and now. But labor is more important than inflation at this point. Inflation is 1. There's some big numbers coming off the CPI print. PCE is already at 2.6. For 40 years, it's averaged 2.4. So we're there on inflation, okay? But the dot plot doesn't come out until the September 18th meeting. And that is the cover that the Fed needs to go out to the world and go, here's what we all agree now after seeing all the data since the last dot plot 2 meetings ago. We're all now aligned. It's 2 cuts. Here's when we're doing it, and we're starting today. And so I don't think there'll be any shocks in the July meeting, but but I think that's how it's going to play out at this point. That CPI number was a big deal. Labor continues to soften. That's a big deal. They're ready to cut. It's highly restrictive on the lower end of the socioeconomic scale right now where rates are at. The real rates are crushing.
Yeah, and absent the actual, you know, economic impacts that a cut's going to have, and you know, now it gets into how many cuts before we have a meaningful impact. I think there's a mindset, right? There's an improved mindset when you feel like you're getting into an easing situation versus where we've been. And so I do feel like even in the last week, there's been like a little bit of a exhale from the street, from the field, from the originators, because they feel like there is, I don't want to say relief or you know, something's on the way that's, you know, not necessarily going to be there, but there's something about having that mindset or having that expectation of, you know, a little bit of improvement coming down the road. I want to give one additional plug before we go. A friend of mine, Tim Rude. I don't know if you know Tim Rude, KP. Tim was one of the co-founders at Citus or at Collingwood Group that of course sold to Citus, became Citus AMC. Tim launched a new business, Impact Capital DC. Tim's like one of the he's a guy that we've all seen on you know, TV news, CNBC, as a kind of an industry expert. But Impact Capital launched a product called Alfred, which is basically Tim took all of his information sources that they had access to at Citus and Collingwood, and they built some AI on top of it. And so Alfred's kind of this aggregator of important information that impacts real estate and real estate finance. I would encourage everybody, if you're not following Tim on LinkedIn, ROOD, Tim Rude, follow LinkedIn. He's putting out a daily LinkedIn post where Alfred's kind of curating the daily news. And I had Tim sent me a weekly summary ahead of this call. We've already covered like 3 of the topics that Alfred said we should talk about, which is encouraging as well. So I wanted to give my buddy Tim a plug there. Robbie, don't try to send him an invoice. Come on, man. You're killing me.
Tim's good. Tim's a good dude. You know, we use an offshore company that was purchased by Citus AMC, so we're familiar with the group, and helps us, you know, with some of the indexing and things like that, and invoices and stuff.
Yeah.
You know, purchase advices in the correspondent channel. So yeah, we're big fans of that group. Good plug. Well, my kids were good.
Yeah.
I know. You know, you know, it's summertime here, and next week's going to be weird. By the way, there's my no background. So it's summertime here. I do a little bit of traveling, and next week I'll actually be on the road with SnapDocs in Atlanta. So I'm gonna have to try and find a way to like do this, you know, at 1 o'clock.
We'll figure it out.
Yeah, we'll figure it out. I may start a couple minutes late, but you know, we all work for our family, so right. So this is a family affair. It's a Friday. Let me show you my little monkeys as we wrap up here.
It's monkey time.
So thank you, monkeys, for being so good. No, we're live.
All right.
What? There's Serafina. What you doing, big girl? There's Luca. Buddy, you're live. Go ahead. Oh, you poor buddy. Anyway, never a dull moment at the Perennial House.
Right on.
So they were so good. They were all lined up by the door.
Translation.
Yeah, life's good.
KP, as always, love to see you. Love to talk with you. I'm glad we get this opportunity every Friday. Everybody come back next Friday for the last word.
Let's do it. Cheers, y'all.
See y'all.